Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. We have a great show today, but before we get to that, I wanted to remind you of a few things. We have 2 great books on Amazon that will help you get the Big Four job that you deserve, and I've included links to those books in the show notes. Additionally, I wanted to remind everyone to make sure that they subscribe to this podcast to stay up to date on the latest Big Four news and career tips. Also, make sure to share the show with a friend if you get a chance. Lastly, follow us on Twitter, Facebook, Instagram, and LinkedIn. I'll include links to all our social media in the show notes. Thanks and enjoy the show. Today, I wanted to discuss the biggest accounting scandals of the past year. And the reason I wanted to do this is because there have been some huge accounting scandals, the latest ones being the Deloitte cyber attack and the KPMG South Africa scandal. It seems like these accounting scandals keep getting bigger and more numerous. But first off, let's start with PwC. As you might remember, PwC failed at the 2017 Oscars. They were in charge of counting the ballots for the Oscars and handing out the envelopes of the winners. But PwC botched the Oscars by handing out the wrong envelope in February of 2017. If you remember, PwC handed out the wrong envelope for Best Picture. They awarded the Best Picture to La La Land. Well, they actually didn't award it themselves. They handed the wrong envelope to the presenters, and the presenters got confused, so the presenters announced La La Land as the winners. The winners, in fact, should have been the movie Moonlight. The situation was corrected, but not before the damage was done. PwC almost lost their ballot counting job at the Oscars, but their leadership begged for the job back, and they were allowed to keep it. Now, the next couple of scandals that PwC faced were their Taylor Bean lawsuit and the MF Global lawsuit. If you remember last year, PwC was sued for their audits of Taylor Bean and MF Global. In both cases, the companies went under and were worth several $billions at the time they went under. And PwC was the auditors of both companies all the way down. And PwC was accused of being responsible for the downfalls of these companies because they were the auditors and they should have spotted the problems at both of these companies sooner. Both of these lawsuits were initially filed with billions of dollars of damages, and in both cases, PwC settled out of court. Now let's discuss some accounting scandals that Deloitte faced over the past year. Now, Deloitte's most recent scandal that we previously discussed was a cyber attack on their email servers in September of 2017. Deloitte's email servers were hacked and the data was breached in their emails. The hackers had access to all of Deloitte's US emails because they had administrator access to the email server. It is believed that at least 6 clients were impacted and possibly more depending on the investigation. This has no doubt damaged Deloitte's reputation as a steward of private information, as tons of private and confidential data was accessed during the hack, which lasted about 6 months. Next up, let's talk about another Deloitte scandal. The next Deloitte scandal involves Monsanto, which is a Deloitte client. Now, last year, Deloitte's client Monsanto was fined $80 million and forced to restate 3 years of its financials. And in this case, the whistleblower's lawyer stated that he wished the SEC could put more pressure on Deloitte. He said Deloitte, as the public accounting firm of Monsanto, should have been able to spot this fraud and stop it. And the main issue in this case was that Monsanto did not have internal controls to track millions of dollars in rebates. They booked revenue for the rebates, but they did not book the costs associated with the revenue, so they had misstatements related to this. And no action has been taken against Deloitte in this case yet. Next up, let's go over some accounting scandals involving Ernst Young. First off, let's discuss E&Y's settlement with the SEC over their audit of Weatherford. In this case, Weatherford, which is an oil services company, was accused of accounting fraud as it related to their income tax accounting practices and their public financials. Now, E&Y was the auditor of Weatherford, so they received the penalty from the SEC for not catching any of the fraud. And the penalties that the SEC issued against Weatherford were north of $140 million related to this fraud, while E&Y was fined about $10 million for their role as auditors and not detecting the fraud earlier. Now, another case of E&Y and an accounting scandal. Last year, this next case is about E&Y partners getting too close to the client and not remaining independent. As you know, if you're a public accountant or you want to be a public accountant, you have to learn about independence. And if you're an auditor, you have to be independent of the client. So last year, E&Y was accused of repeatedly signing off on financial statements, stating that they were independent when in fact they were not. Neither E&Y nor their wrongdoers admitted any violations of standards as part of this settlement. And the settlement was with the Securities Exchange Commission, and they were in charge of handing out the penalties in this case. And the SEC stated that E&Y ignored red flags about independence being impaired. And there were two cases of impaired independence that faced the most scrutiny from the SEC. One was where an E&Y partner got too close to the CFO of an audit client. And this partner used the firm's money to go to NFL games, attend the Masters golf tournament with the client, and he even spent some nights at the CFO's house multiple times. And this partner at E&Y spent over $100,000 entertaining the audit client. So he was definitely impaired in his independence with this client. And the other case with E&Y of a partner getting too close to a client involved a female partner who became romantically involved with someone at the client and continued to sign off on financial statements while she was still romantically involved with him. Now that is definitely a violation of independence. Okay, let's go over another accounting scandal with Ernst Young. Another case with E&Y was where one of their auditors was charged with insider trading. The SEC settled charges with the junior auditor, Ernst Young, in March of 2017. And the auditor in question was named Nima Hedayati, and he worked at Ernst Young. And he had to pay a fine of about $87,000 to the SEC. And what he did was he found out information about this company, Lam Research Corporation. He found out that they were going to acquire KLA Tencor Corporation, which was just another company. And both of these companies manufactured equipment used to manufacture semiconductors. And they were both Silicon Valley companies based in California. He was on this client, and he did a little research, and he found out that news had not broken yet, so he tipped off his fiancée and his mother. And after the merger plans became public, KLA's stock price rose nearly 20%. And the auditor and his mother made nearly $43,000 off of the trades. E&Y terminated Hedayati after the discovery was made. Okay, now let's go over the scandals that KPMG has faced this year. First off, there was a lawsuit earlier this year where KPMG was accused of discriminating against Asian employees in New Jersey. And they settled allegations that they discriminated against Asian job applicants in their Short Hills, New Jersey office. And they settled these allegations with the U.S. Department of Labor. And they settled the allegations by paying a fine of $420,000 to the Department of Labor. And in this case, KPMG allegedly discriminated against 60 job applicants. The next scandal that KPMG faced was over their audit of Wells Fargo. And they faced a lot of scrutiny and questioning. One of the biggest questioners was Elizabeth Warren. And as you may recall, Elizabeth Warren and Ed Markey, who are senators, previously written to KPMG to figure out why they did not uncover the Wells Fargo fraud earlier. And the reason that Warren and others have questioned KPMG is because Wells Fargo committed tons of fraud for years by setting up fake bank accounts for their clients. And what resulted is that the Consumer Financial Protection Bureau fined Wells Fargo for $100 million for creating 1.5 million deposit accounts and over 500,000 credit card accounts. And these accounts were not authorized by customers. So Elizabeth Warren and Ed Markey wanted to understand how KPMG did not detect this fraud. And that's still ongoing, the pressure they're receiving from those senators and the pressure they're receiving in the marketplace. Because that was a huge fraud, and the auditors should have detected that. The next scandal with KPMG was an incident where they had to fire 6 auditors, including the lead of their U.S. audit practice, over a PCAOB inspection. So KPMG fired 6 of their auditors in April of 2017, and these firings even included the head of their audit practice in the United States. What happened was that they were given an improper heads up ahead of a public company accounting oversight board inspection, also known as PCAOB. And how it occurred was there was an employee who just joined KPMG from the PCAOB, and this employee received confidential information that one of KPMG's audits would be receiving a PCAOB inspection. And he shared this information with other fellow employees at KPMG. KPMG only learned about this information from a whistleblower within the firm, and they said that they learned of this information in late of February 2017. And upon learning of it, they immediately contacted the SEC and PCAOB. The next accounting scandal that I want to talk to regarding KPMG is their KPMG South Africa scandal. In September of 2017, KPMG was engrossed in a scandal where they were accused of signing off on audits of a corrupt family in South Africa. The family was a Gupta family, and the family is accused of stealing money from the taxpayers through several of their companies, many of which apparently KPMG signed off on as okay. KPMG has since come out and said that those sign-offs were not correct and they should have been more diligent in their work in South Africa. And as a result, they fired the CEO of their South Africa office and have been losing many clients in South Africa ever since. And many people in South Africa want KPMG to be barred from working in the country. And those aren't just regular citizens, those are people within the government saying that KPMG should not allow it to do work. In conclusion, the past year has seen many scandals and lawsuits regarding the Big Four. The two latest are the KPMG South Africa scandal and the Deloitte data breach. But this year started off with a bang with PwC botching the Oscars. It seems like these scandals for the Big Four just keep getting bigger and bigger. The question is, why is this occurring? Is it that the Big Four are becoming too large and it's too hard to manage them? Or is it that their employees just lack training? Maybe in the pursuit of profits, people become blind to ethical lines. Either way, it seems like these scandals are becoming larger and more numerous. To stay up to date on all the Big Four scandals, make sure to subscribe to this podcast and visit our website, big4accountingfirms.com. We are a growing podcast and a growing business. I would appreciate your help in growing. So if you could share this podcast with a friend and give us a good review on iTunes, we'd really appreciate it, as it would help us grow and provide you with the best Big Four content and Big Four career tips. Thanks again for listening.